slide. So the entities of Google involved here are Google Ireland and Google France. So first, Google Ireland is an Irish company and is a subsidiary of Google Ireland Holdings. In turn, Google Ireland Holdings is a subsidiary of Google LLC, which is an American corporation. So Google France is a direct subsidiary of Google LLC. So we can see the layering for the two. So first, Google Ireland, Google Ireland Holdings, and Google LLC. But for Google France, it's the direct subsidiary of Google LLC. Okay, next slide. So the facts of the case. So in 2022, so Google Inc. first and Google France entered into a marketing and sales assistance contract, or an MSA. Later on, after 2 years, Google Inc. transferred that contract, that MSA, to Google Ireland. So, discussing several salient points of the MSA. So first, under the MSA, Google France employees will provide marketing and sales support to Google Ireland. So, but it's clear that Google France should not act as an agent and should not be able to negotiate or accept orders in the name of and for Google Ireland. So as form of compensation, they are to apply the highest amount between the cost of the service plus 8%, or it's between, sorry, this is the part that's slightly confusing in the direct text that was given, but as I understood it with the help of my French friend, it actually said for the compensation, you apply, it's either first the cost plus 8% or 30% of Google Ireland's turnover, whichever is higher. So basically, as a consequence of the transfer in 2004, the products and services sold by the Google Group to French clients were reported to Irish tax authorities, whose tax are actually lower than the French and France. So, next slide. So another point is that, so this is what I mentioned earlier. So to clear things up, the computation for the remuneration is applying the highest amount between the cost of the service or good plus 8% or 3% of Google Ireland's turnover. So yun yung nire-report nila kay Google France. So in 2012, so French tax authorities sent a correction proposal to Google Ireland. So based on from news reports, it seemed that the French tax authorities found a discrepancy and considered that Google Ireland actually had a permanent establishment in France. So as we learned, the OECD Model Tax Convention does define a permanent establishment, which means in itself they have a fixed place of business through which the business or the enterprise is being done or carried on. So here, since sabi ni ng French tax authorities na even if the service is just online through the services, meron kang permanent establishment in France. Okay, so what the French tax authorities did was they identified an adjustment amount of around 1.1 billion euros. Yes, so then they actually filed 2 complaints against Google. So one under the French tax code, which is particular to the non-declaration of the appropriate amount, that is in relation to the argument that they have a permanent establishment in France. And second, another complaint based on the French Penal Code, so which is basically for tax fraud. So the arguments against Google that is basically sort of compiled from all levels of investigation. First is that the remuneration of Google France from servicing Google Ireland was insufficient, considering the extent of functions exercised and the related risk taken by Google France. Second, they are saying that the actual service that's being done by employees of Google France are actually more than what is required in the MSA, and what they are contractually required to do under the MSA. So Lastly, the Google Ireland was able to establish that these commercial relations between Google France and large customers in large French clients was detrimental, or well, was important to the business of Google Ireland. So next slide. Other arguments that are more or less tax related, as I mentioned before, the tax authorities are saying that Google Ireland has a permanent establishment. So they're saying that Google France is dependent is a dependent agent of Google Ireland and can use and are using Ireland's facilities. Second, they must do adjustments for VAT, considering that there are resources within France that are used in the ordinary course of business. And is used by Google Ireland. Google Ireland must also do adjustments for withholding tax and professional tax. So, as regards professional tax, they're saying that they have professional activities that are carried out by Google Ireland in France, and they actually own assets in France. Okay. So, under the Paris Lower Tax Court ruled that there's no permanent establishment. So, they're saying that while the contracts were approved by Google Ireland, the contract validation was a mere formality, and that the contracts were not concluded in France, which is related to our concept of sitos. And then next is that Google France had no authority to bind Google Ireland in any contracts with its clients, which was clear in their MSA. So next, the issue here is simpler than other cases. Whether Google Ireland is liable for tax adjustments to the French tax authorities for having a permanent establishment therein. So it's necessary to determine whether Google Ireland indeed had a permanent establishment in France. So I believe that this is a TP issue, considering that establishing whether or not there is a permanent establishment in a certain jurisdiction determines whether income should be allocated or attributed in that jurisdiction. Okay. So next slide. So basically, the Paris tax authorities they sided or decided in favor of Google, saying that there is really no permanent establishment in France. So they reiterated the arguments and just said that of the lower court, saying that the Google France is not able to conclude or act for, it's not even an agent of Google Ireland, so it cannot be considered as a permanent establishment of Google Ireland in France. So basically, Google was not taxable in France on Google AdWords to French advertisers and clients, since they were not able to contract in the name of Google Ireland. Okay. So they also said that Google is not liable for VAT and not liable for professional tax, which is all related to the argument that Google Ireland did not have a permanent establishment in France. So what's interesting in this case, since I mentioned that there are two kinds of complaints, so it's the one that's tax in nature, it's more civil, and the next is the tax fraud case. So what happened here was, even if it was determined by the courts that there is actually no permanent establishment, so there was what happened was they still found that there was the reduction in the compensation paid by Google Ireland to Google France allowed Google France to evade payment pa din, and amounting to around 189 million euros between 2011 to 2016. So on that basis, they still wanted to pursue the criminal action against Google. So what happened is that instead of pursuing the case, in Europe they have this thing called public interest fines that are based on agreements. So these agreements are it's more like a compromise. It's akin to a deferred prosecution agreement, which is more done in the US. So what they do is they actually enter into a compromise, and they call it a public interest fine. So they just basically pay back the money to the treasury. So And based on French law, the public interest fine for France is proportionate to the gains derived from the country's wrongdoing, with the amount of the fine to be capped at 30% of the company's average annual profit or turnover. So here, even if it was not, it was ruled by the court that there was no permanent establishment due to the fact that it had allegations of tax fraud, and under the, kasi the system that they, well, the agreement is actually based on a practice that was founded on a convention. Yung practice po nila na gumagawa sila ng mga ganyang compromise agreement is based on a convention. Yeah. So here, they still had a global settlement. So, well, ngayon, ginawa nila is for 2005 to 2018, but for a very large amount still. So, but that will put an end to all of the appeals, even the appeal that is for this case that was supposed to be filed with the French Supreme Court.
Yeah. Nobody admitted that there is admission.
There's no admission. It's really just a compromise between the government and then Google. So yes po, but the thing is here, even if the assessment earlier was for like 2011 to 2016, the global settlement involved fiscal years 2005 to 2018 for the total amount of 465 million euros. So
both parties.
yes po. So well, like Paolo, the key takeaway here is really to, when dealing with cross-border transactions, you really have to check if there is a permanent establishment, because that will affect how much or if you will attribute a certain portion of your income to that entity in that jurisdiction.